Bitcoin's importance is moving beyond investment to directly impact lives and economies, especially in places where traditional banking fails. A key area of impact is providing essential financial services in emerging economies. In regions like Africa, cryptocurrencies, primarily stablecoins pegged to the US dollar, are solving urgent real-world problems. For instance, Yellow Card, a major exchange platform in Africa, processes billions in transactions by enabling businesses and individuals to send payments across borders simply, quickly, and securely, functioning as a critical financial network.
Real-world economic impact. Bitcoin and stablecoins are transforming economic participation from millions, particularly in developing regions. Empowering the unbanked. Core function provides access to savings, payments, and cross-border commerce for those without bank accounts. Example impact. In Nigeria, where a large portion of the adult population is unbanked, Bitcoin adoption saw growth exceeding 1,200% between 2019 and 2021.
Protecting wealth. Core function acts as a hedge against severe inflation and local currency devaluation. Example impact. People in countries like Argentina, Venezuela, and Lebanon use Bitcoin to protect their income and savings from rapid price increases. Reducing remittance costs. Core function enables cheaper and faster cross-border money transfers compared to traditional services. Example impact. Sending money from Ghana to Nigeria can be done in minutes with lower fees than typical bank transfers.
National strategy. Core function adopted as legal tender to increase financial inclusion and attract investment. Example impact. El Salvador became the first country to make Bitcoin legal tender in 2021, though adoption among citizens for everyday payments has varied. Influence on the global financial system. Bitcoin's underlying technology is prompting a broader re-evaluation of money and finance, which may affect everyone. Institutional and government adoption. Large corporations, investment firms, and even governments now hold Bitcoin as a strategic reserve asset. The United States launched a strategic Bitcoin reserve in March 2025, holding over 200,000 BTC.
Spurring innovation. The blockchain technology behind Bitcoin has given rise to decentralized finance, DeFi, which aims to provide financial services like borrowing and lending without traditional intermediaries. Driving central bank digital currencies, CBDCs. In response to the cryptocurrency boom, over 130 countries, including the US, are now considering or developing their own digital currencies. A balanced perspective, challenges and risks. It is important to acknowledge significant challenges that accompany this innovation. Volatility. Bitcoin's price is highly volatile, making it a risky store of value and complicating its use for everyday purchases. Regulatory uncertainty. Governments worldwide are still crafting rules. This evolving landscape creates uncertainty for users and businesses. Environmental impact. The energy-intensive process of mining Bitcoin consumes vast amounts of electricity, raising serious environmental concerns. Security risks. While blockchain is secure, exchanges and digital wallets can be vulnerable to hacking and fraud. In essence, Bitcoin's importance is twofold. In developing economies, it offers a pragmatic tool for financial inclusion and stability. Globally, its technology is acting as a catalyst, forcing a fundamental rethinking of the architecture of money and finance itself.
To understand Bitcoin's price, you need to look at two sides: its technical design and external market forces. The fixed supply schedule is a core, unchangeable factor, while market sentiment and regulation can cause daily volatility. Here is a breakdown of Bitcoin's main price drivers. 1. Supply and halving events. Predictable. What it is a predetermined, unchangeable schedule reducing the rate of new Bitcoin creation. Market impact historically triggers significant price rallies due to supply shock anticipation. Key insight: this is Bitcoin's foundational economic rule. New supply decreases until it stops completely around 2140. 2. Market demand and sentiment. Volatile. What it is: investor adoption, media coverage, and public perception. Market impact drives most short-term price swings and speculative bubbles. Key insight: Bitcoin's value is largely determined by what people are willing to pay. 3. Institutional and regulatory news. High impact. What it is: actions by governments, financial institutions, and large corporations. Market impact can cause sharp, immediate price movements in either direction. Key insight: positive news, like ETF approvals, boosts legitimacy. Crackdowns or bans create sell-offs. 4. Macroeconomic conditions. Indirect. What it is: inflation rates, currency devaluation, and traditional market performance. Market impact increases demand as a perceived hedge during economic uncertainty. Key insight: often cited for its digital gold store of value property during crises. Understanding digital scarcity and halving. The most critical technical concept for Bitcoin's price is its fixed supply. Unlike traditional money, no central bank can create more Bitcoin. The protocol caps the total at 21 million coins. New coins enter circulation through mining, where miners are rewarded for validating transactions. The halving. Approximately every 4 years, the reward miners receive is cut in half. The most recent halving in 2024 reduced the reward from 6.25 to 3.125 BTC per block. This scheduled reduction in new supply is a major cyclical event that historically influences price. Important risks and volatility factors. Understanding price drivers also means recognizing the risks. High volatility. Prices can swing wildly based on news or sentiment, making Bitcoin a high-risk asset. Regulatory uncertainty. Government policies are still evolving and can impact access and value. Market sentiment. The price is heavily driven by speculation, which can lead to bubbles and crashes. To explore this further, you might want to learn about the technology enabling all this, like the blockchain, a decentralized public ledger, and proof-of-work mining.